Zoom. There we go. Now I'm going to share my screen and so you should be looking at the chart, but first of all I need to, can you now see the Ninja?
Yeah.
Welcome to live Forex analysis sessions.
Mm-hmm.
This is my disclaimer, my legal disclaimer. I'm not going to read it all out, but basically what it says is I'm not licensed to give financial advice. We're just a group of guys just like you who do these sessions for educational purposes. We suggest that you take proper risk management if you take any trades, and reminding you that there's a lot more information in IM Academy, and also the fact that we recommend that you do one strategy at a time. And there's a full disclosure. So that's me covered legally. And if I now go back to my chart, the first thing I do every morning is I look at Forex Factory and just see if there's any major news events. It's predominantly yellow, low impact news. There's a red flag item in Canada at 1:30, and there's a couple of low level impact USD items there. Nothing in particular to worry about apart from this red flag in Canada. And we normally look at my FX book. Why have I got involved in this? Okay, don't want to see this. I don't want to look at rebates. There we go. So this is the MyFX book economic calendar, and pretty much the same, all fairly low level news until you get to 1:30. A couple of red flag items and a couple of USD. Okay, so we've covered the news and we've covered the disclaimer, so we'll get on with the proper session. So I'm going to go through the basics, and I'm going to invite any questions at all. I welcome questions. Just, you might think it's a silly question to ask, but I'm no doubt there'll be other people wondering the same. So first of all, I use, as you can see there, I use TradingView, and I use a broker feed called Global Prime. If you click on this symbol search and you type in XAU USD, which is gold, you'll see that there's a choice of broker data feeds. Now, just there's quite a few there, and they come from different brokers. So you've got Oanda, you've got Forex.com, FX Open, IDC, Pepperstone. So I choose Global Prime for no particular reason other than the fact I'm not with any of these brokers. Now, if my broker account was with, for instance, Oanda, I would use the Oanda data feed for my chart markups. If I was with Forex.com, I would use Forex.com for my markup, because that way you would get a match in the information that they send out on the broker feed, a match with your broker account. Now, I'm not with any of these brokers, so I just choose Global Prime. It works for me, but the decision on which one to use is entirely down to you. So that's the first thing we need to look at. What broker we're going to use to get the information. This is not the broker that we use for our account. This is the broker we use for data. So Global Prime is my data feed. I'm on the TradingView for XAU USD, and this is the basic chart. Now, these two vertical lines, this blue dashed vertical line there and there, that is the start of today's, the start of yesterday's session and the end of yesterday's session, which is where we start if we're going to apply volume profile. Now, very quickly, volume profile is available on the free version of TradingView. It's also available if you've got one of the paid versions of TradingView. I'm just going to show you, if you click on this hamburger icon up at the top there, in the top left-hand corner, if you click on there and you go to let's try home, more home. Let's see what that brings up. I'm trying to, no, that's not it. What I'm looking for is the different plans that you can get with TradingView.
Under account, Richard.
Under account. Yeah. That one there. Yeah, okay.
Yeah.
Yeah.
Yes.
So
Accounts and billing.
Account and billing. Right. So I'm actually on the Pro plan, and I pay annually, but there are looking for the one where you compare. Well, I can't find it. I was looking at it earlier, but I cannot find it. But anyway, if you look at the plans, I wonder if that's it there. But yes, that's what I was looking for. So there are three plans. You've got the free version, which obviously costs you nothing. You've got the Pro plan, the Pro Plus, and then the Premium. You've got the prices. But the interesting thing is, if you look at it compares here what you get with each plan, and basically the difference is that you get more alerts and you can get more indicators the further you go up that ladder. But with the free version of TradingView, you get sufficient to get you started, get you going. So I'm going back to the chart. And right, so when we use volume profile, we look at yesterday's trading session to get yesterday's volume profile. Now, if you look at indicators up at the top there, click on indicators. If you look at, if you click on, I believe it's technicals, yes, it's technicals, and then you go across there and click on volume profile. There's a number of different volume profiles. I have done a video outlining the difference between these types, but basically I use the session volume profile, which is that one there. You click on that, it'll take you to the session volume. I'm not going to do that because I've already got it on my favorites. I've got it here in this channel here. I've got it hidden. If I put it on, you'll see that the new version of TradingView's volume profile actually draws the three lines that we talk about. It draws those for you. I need to click on extend and we'll see what I mean. So it's actually drawing, this is yesterday, and you've got the two blue lines, so the top and bottom of the value area, and you've got the POC, which is today's target. So those lines are already drawn for you. I used to they used to end at that point, and I used to have to extend them along. So that's new at the minute. I've started doing something slightly different in that I I think there are too many lines there to, well, I get easily confused, and so I try and reduce that confusion by getting rid of the extended value area high and value area low, and I just leave the extended POC. And it's also reduced the number of lines. And I identify today's field of play just by putting a rectangle, and I put it at the end of that blue line there. I drop it down to the end of that blue line there, and then I extend it to the end of today's session. So that would be 10 o'clock UK time. So that started at 11 o'clock last night, and it finishes at 10 p.m. tonight UK time. So I've now got my field of play and my eyes drawn to that automatically. Next thing I do is I put I label these lines, and I've already got templates set up. You can do this yourself. The POC, yesterday's POC, is also today's target. So that is my reminder there. I put on a value area high up there, and value area low. I'll put that there. And that's it, we're all set up. We've got yesterday's trading information. The volume profile, I've got it set up so that the blue lines here are the V70, the 70% of the volume, top 70% of the volume is occurring at those prices. The other 30% I've got marked up in grey, and I focus on this value, what we call the value area, which is the top 30%, sorry, the top 70%. And what that means is, if you look at the shape of this volume profile, you've got quite a big peak there, you've got a smaller peak there, and you've got a third peak there. And if you look at where my cursor is, if I put it at the end, they're very, very close. The red line is on the actual highest point, but there are two other points fairly close to that. And basically what that means is that yesterday, in all the trades that were placed yesterday, the most interest, the most orders were placed at that point, which I'll just move you guys out the way, that point which was a price of 1828.13. So all of the buying orders, all the selling orders, all of the stop losses and the pending orders, that's where the peak of activity occurred. The peak of interest occurred at 1828.13, followed by that point there, which was 1824.12, and that point there, which was 1821.35. So those are the key areas that I'm interested in. And we're using yesterday's volume profile for the simple reason that today's volume profile, which is here, is still developing. This can change. You might even see it change in front of your eyes whilst we're on this session. But today's POC is subject to change, so it's not as useful to us as that one is. Now, before I go any further, you can get, if you were, this is volume profile VPS3, which is available on all of the paid for versions of TradingView. If you don't have a paid for version and you're working on a free version, if you look at you can actually still get the volume profile by using this side panel here. And if you go down to 1, 2, 3, 4, 5, 6, 7, the thing that looks like an abacus, if you hover over the arrow, it says prediction and measurement tool. If you click on that, you get a drop down menu, and the very last item on there is fixed range volume profile. which you can use in place of this paid for version. I'll do that later. If we get time, I'll show you how to put that on, but I'm going to continue with what I've already set up. Right, so if I was trading on my own today and not demonstrating this, I would have set this up early this morning, and I would have had a look at where price is in relation, where current price is in relation to our field of play. Because the first question I ask before I trade is the current price within my field of play? And obviously the answer today, right from the start of today's session, it's never been within my field of play. So technically, we're not able to take any trades at the minute. Let's just work on principle. If this price was within our field of play, what would we do with it? Well, if it was in this value area, if it passed over that line and came into our value area, the principle of the three-line strategy is that I would be looking for trades. I would be looking for a trade from wherever price was when I came to the chart, and I'd be looking for a buy up to the target, up to the POC, and that would be my take profit. And I will get into the trade once it went into the yellow shaded area. Now that would give me a potential of 60, 70, 74, 75, about 77 pips. So that's a decent trade. Now I'm just working on the idea that we're just pretending that price is in the value area when we look at it. So that would be my first trade. Now at that point I would get out of the trade and I would wait to see what happened to price, because it's either going to reject. I've lost it. There's two things can happen to price at that point. It can either reject or it can continue its journey upwards. But I don't know which it's going to do. So I get out of the trade and I wait until price shows its hand. I'm not trying to second guess what's going to happen to the market. I wait until it shows me quite definitely whether it's rejecting off there or whether it's continuing its journey up there. If it continues up, then I would take another trade, another buy up to the value area high, and I would set my take profit at that point. If it comes down, then strictly by the three-line strategy rules, we're not going to get into a trade because we only take trades towards the target, not away from the target. Now, if price comes away from the target and comes further down, I'd be waiting for price to come back up, and as price makes its way back up, I'd be taking a buy back up to the target. So that's how the three-line strategy, the basic three-line strategy, that's how we operate. We only take trades up to the target or down to the target and not away from the target. So that is the three-line strategy in a nutshell, but we've developed it since then. And we've now got into a situation where we are able to take trades away from the target. So there's certain criteria that we need to satisfy, and I'll go back to yesterday and I'll show you my criteria. So here is it's difficult to explain how to do this, but I'll be using the POC from the previous day. So let's just do a little bit of pretending here and talk about, let's pretend that this is our value area here and that this is our target. It's not, but let's pretend. So bear with me. Where we'll be looking here would be, for instance, at that point there, price is starting to go upwards. At that point there, price starts to go upwards and it's heading towards our target. So I will be looking at taking a buy up to that POC. I'm conscious I'm working on false information here, but I'm just trying to demonstrate it. I wouldn't automatically jump in just because price started to go up. I would qualify this trade, and the first thing I would do is I'd put on the Ninja Matrix, and I would say at that point where I was thinking about getting in, we're actually still in a downward. We've got a ninja down rather than a ninja up. So I wouldn't get in until that ninja up occurred. So the Ninja Matrix is the first thing that I'm looking for. The second thing I'm looking for is the Ninjacator. And as you can see, the ninja up occurred slightly after the Ninja Matrix. So we've got a Ninja Matrix and a Ninja Matrix and a Ninjacator, both heading, both showing a potential buy. And my third criteria is the 5 MA, which is the yellow line, is that actually above the green, which is the 13 MA, is it above and is it moving away from it? So is the gap widening? And as you can see, it is. So that point there, all of my criteria are satisfied, and I would get into a trade at that point, and I would take the trade up to the target, and I would get out of the trade at the target, even though, as you can see, price went on and I could have got some more pips. But I didn't know it was going to go beyond that. The safer trade is purely to the target. As you become more experienced, you might stay in. The thing that might prompt me to stay in that trade, because I've done this for quite a long time now, and I've got the experience and the confidence to do it, is that the matrix remained at green. The matrix was still green, and that would give me confidence to stay in if I wanted to. But as you can see, it was still green when price turned in the opposite direction. So that can work against you sometimes. I would say the safest trade is from that point there up to that point there, and then get out and wait for another opportunity. There's another opportunity here to take it down to the target, and those are the two trades that you will get out of yesterday. So let's
just to clarify, would you take it on ordinary candles or Heikin Ashi?
Right. Okay. I trade on ordinary candles. However, you just reminded me that in order to get a true reading on the Heikin Ashi candles, I need to be, sorry, in order to get a true reading on the Ninjacator, I need to be on Heikin Ashi candles. So let me just go through that again, because I didn't do that properly. Okay, it has actually altered it slightly in that, yes, we got the Ninja Matrix. Yeah, we were looking at this one. Ninja Matrix is still green. The Ninjacator up was in the same position. As it happened, the Ninjacator is in the same position on Heikin Ashi as it was on ordinary candles. I'll just go back. Yeah, it's in the same position. Now, that is a really important point, Chris, because I occasionally, especially when I'm doing these sessions, I forget to change backwards and forwards. That's my bad. But yes, I would always check for the indicator on Heikin Ashi candles. I would trade on the normal candles. As it happens,
Okay, thanks, yeah.
exactly the same. Now, just at that point, we had a Ninja leaders meeting last night, and Kevin Ohm has done some work on the Ninjacator, and what will come out, one of the things that came out of that was that you will not need to keep flicking backwards and forwards from normal candles to Heikin Ashi candles in order to get an indicator reading. It'll be, even if you're using normal candles, you'll still get an accurate indicator up as if you were on Heikin Ashi. Now, I'm not sure whether that has already been implemented, and that's why we've got it there on Heikin Ashi, and we've also got it there on Holy Candles. He may have actually put it on. He said he was going to give it to us Ninja live traders first, and it's going to be available to everybody in the very near future. But that could just be a coincidence. It's in the same place. But until that happens, if you're using ordinary candles, you might get an indicator that is a bit of a false reading. You need to be on Heikin Ashi candles to get the accurate reading. So, as I say, it could be just a coincidence, or it could be that he's applied it to my. In fact, what I'll do is I'll have a look. No, I've still got Ninjacator 2.45, so that's the current version. The new version is going to be version 3, so look out for that, Paul. There's going to be some big announcements shortly. Okay, so thanks for that, Chris. My fault. I do keep forgetting. So
Richard,
I've forgotten where I was. Right. So yes, I know where I was now. What I was going to say next was we've developed this. It used to be just taking trades up to the target and down to the target, and up to the target and down to the target. And there are, if you back test this, you'll see that there's quite a lot of days, not every day, but quite a lot of days when price stays within the field of play and you can get several trades out of trading in that fashion. But we've developed it, and we can now take trades away from, so I'll just get rid of that. So we're now able to take trades away from the POC, and the way I do that is I wait until a full candle has opened and closed below the line, just as a confirmation that price is indeed reversing, and then I get into the trade to take it back down to the value area low. If it went above and it was going up to the value area high, I would wait for a candle to open and close above the line, and I'll get into a trade up to the top there. I have to say that I wouldn't be really excited about getting into a trade that went from the line to the value area high, because although you've got 20 pips, slightly less than 20 pips in that, by the time you take your broker spread off it, and by the time the candle is open and closed, you're probably looking at being more or less on that line there. So you're looking at not very many pips in that trade. Still worth taking, but not as interesting, not as exciting as if it bounced off and went back down to there. And then that takes us on to the third development of the strategy, because we've tested this. We're still able to take trades even though price is outside of the value area. It's in order of preference, I would rather take a trade within the value area up to the target. That's the safest bet. That's the safest trade to take. Second safest trade is away from the target, but still within the value area. And the third safest trade is trades from outside the value area, in either direction.
Like it is now.
Like it is now, yeah. So this will be my third preferential trade. Now, if I'm looking at current price and I'm wondering whether I'm going to get into a trade, first of all, I'm looking for targets, and this value area low is a potential target, and obviously that is a potential target. There's an intermediate target, which is this blue line, and this is another change that I've introduced since the original video. This blue line is the 200 moving average, and as with any line on any chart, when price reaches a line, it has a potential to either bounce or break, and we don't know which it's going to do. So if I was taking a trade from this point, I would set a take profit target at that point, at the blue line. And again, I would, if it looked like it was going up, I would wait for a candle to open and close above the blue line, and then I would take another buy. I would qualify it by going through the same procedure. I would look at the matrix and I would say, yes, we've got the ninja matrix up, it's green, it's saying yes, we can go for a buy. If we put the Heikin-Ashi candles on, well, again, we've got a ninja up. So we've got a ninja up at that point. I think if I move that ninja up out the way, you'll see that there was a ninja matrix underneath it. Let's just double check. Yeah, there's a ninja matrix there, and when I put the Heikin-Ashi candles on, it doesn't disappear. It's hidden by the ninjacator. So you've got both. You've got two confirmations there. You've got ninja matrix green. You've got ninjacator up, and then the third one, the yellow 5 MA, is above the 13 green MA, and the gap is actually widening. So I'd be happy to get into a trade. At this point, I would have got into it, had I been trading right now, I would have got into it on that candle, and I would already have got myself, well, I could have got in during this candle. It's a 15-minute candle, so I could have got in halfway through it, and I would have taken some pips. But even just going on the second candle, you're looking at 43 pips there in that move. Now, I think I omitted to say, because this blue line here is today's volume profile, which is still developing. That's why price is hesitating at this point. You can see it's wicked up to that line, and it's bounced off it on 3 occasions. Well, 2 and a nearly. So it's struggling to get past that line, because this is today's volume profile, and it still affects how price reacts. I think it'll probably break through, but it might not. It might keep on bouncing within these two blue lines. It might go into consolidation. Well, it is in consolidation. It's bounced from that line to that line and back up again to that line. It popped its head out down here, but it's still respecting the 2 blue lines from today's volume profile. It may come back down to this red line, which is a strong magnet. It's not as strong as that one is, but it's still a magnet, and it might just attract price down for the time being. So when we're talking about taking trades, we have to bear in mind any lines that are on the chart. Let me just emphasize that and say, this is yesterday's volume profile. This is the one that is most important to us today. And look at, the peak in volume was there, which was a target, but there was a couple of other important line zones, I should say. One is around about that point there, and one is around about that point there. So if it does go into the value area, it may well go part way up to this sort of level with that point there. It may well go to there and then hesitate. It might bounce off it. It might break through it. If it does break through, it might bounce off that one there, or it might break through it, and then it might go up to that one. So you've got potential targets. And the way I trade is I don't try and second guess what markets the gold market is going to do. I wait for the market to tell me what it's doing. I wait for it to make a move. And I then, when you can see here, the price is actually bouncing off like this. Today's, but that will be today's. It will be tomorrow. That'll be the value area high level, but that can change. So it is important. And then just sort of thirdly, if I can move you guys out the way and bring some other lines into vision. I've got other lines on my chart. You see this red dashed line? That is an outstanding point of control from a previous day. I haven't labeled it, which I should have done, but if we go back, we might find where I got that from. Yes, it's there, look. There was a point of control there previously, and I've marked it off as a potential target. So just going, if price goes through our value area high and it continues heading north, that is a potential target. There's another potential target here, which is the, I believe that's the 800 MA moving average. So the price might go up to that and bounce or break, and then it might go up to that and bounce or break. And equally, I've got some dash lines below, and these are previous. There aren't any previous POCs below the current price. I'll show you why in a minute. But these are previous swing lows. And again, if we go back far enough, and I think the first one goes back to February sometime, you'll find that there's been a low that's come down and met a resistance and then gone back up and stayed well away from, and so that's a fairly strong level of resistance. So I'm just trying to illustrate what we do when we're outside of the field of play. I'll get back to reset the chart. I'll strip it back a little bit. Volume profile, indicator. Okay, so what I was looking at earlier this morning was the big picture. So if I go, let's say, onto the 1 hour chart, I'll take off the volume profiles. You can see I've got outstanding POCs up here and up here. There's this one here, which I didn't label, but it's obviously from this day here. That was the 12th of May. I'll put a label on it. And then we've got some lines below. So these are potential targets. But if let's go to the daily chart. And that was the previous high. That was the 8th of March, and price went up to that high and then came down. On this chart, that looks like an area of consolidation. And then it went up, it broke out, and it went up to another previous high. And since then, it's been almost entirely in a downward trend. That's the bigger picture. That's on the daily chart. If you come down to the 4 hour chart, you'll see that there's a high there, and it's been steadily in a downward trend until just recently, and it's just peaked itself back up again. And the 1 hour downtrend, slight uptrend, back in a downtrend again. We're in consolidation at the minute. So I always take a look at the bigger picture, just to try and work out where price might go in the future. Always look left. So if I was to, well, I am, when I finish this session, I'm going to start looking at this chart with a view to taking a trade. I would like price to get into the value area, because, as I say, those are safer trades to take, and I'm very cautious. I try not to take trades which are likely to turn around on me. Right, any question on what I've done so far?
Morning, Richard. Could I just look at your 1 hour chart again, just so I could do a quick snap of it with all your outstanding?
You've got outstanding points of control above.
No, it wasn't that one. You had another chart. It had all your. Was it the 4 hour?
That one.
Yeah.
Yeah. Yeah, that's the real big picture.
Yeah. Cheers.
Okay. Now, if you look at that chart and you get that sort of hits me in the eyes, and I get slightly confused. What you can do, just as a tip, if you go onto this cog here, which is chart settings, and you let me think, which is it appearance, session breaks. If I uncheck this session breaks, it gets rid of all those blue dashed lines. You've now got sort of pale coloured orange bars just indicating. So it's easier to look at that than with the blue lines on. So just a tip there. But this is how I set my charts up, and I keep these points on my chart for future reference. There's a couple of outstanding POCs here which I haven't labelled, which I need to label, because otherwise you lose sight of where they came from. It's not critical, but I find it helpful. And as you can see, all the outstanding POCs are above the current value area, and below all you've got is previous swing lows. I'll see if I can find an example of the swing low. Going back a long time, there we go. There was a swing low there, which was the 3rd of February. There was a swing low there, 28th of January. There's one there, which was the 15th of December. And I think the others further back. But you can see why eventually they become important, because price went down to that one there. You see the first one, which is 3rd of February. It came down and it rejected. It totally swung. It wicked down to that, and then it went away from it. It's never been back to it until the 16th of May. That was a couple of days ago. And if we zoom into that, you'll see there. It wicked in. It came down specifically to take out that previous swing low. I guess I can get rid of that now, because it's been taken out, so I'll get rid of it. We've got others further down. We've got one way down here, which it will come back to at some point. Problem is we don't know when. Now the other thing I look at when I'm analysing the chart, I go to the 15-minute. And I'll just go back as far as yesterday. So this is yesterday's chart. What do you notice about this?
It's a banker's candle.
Yeah, there's banker's candle and there's an awful lot of imbalance. This was yesterday lunchtime. I was on this session at 1 o'clock yesterday, so this had just occurred. Yeah, that's the 1 o'clock candle there. And ever since that 1 o'clock candle, we've been in a downtrend all day yesterday. And I'll try and show what I mean. See from the bottom of that wick there. Well, no, if we start up, there's a slight imbalance there from there down to the top of that wick. I need to change my color, otherwise we're going to get confused. So I'll put it in a pale purple. From the top of that candle, just down to the top of that green wick there. Oh, this is getting in the way. And if I extend that, I just need to tighten that up. It's just a sliver, and maybe I should have ignored it. But there is a slight sliver of imbalance there. There we go. I've got it there. There's a bigger imbalance here. So from the bottom of that wick down to the top of that wick. I don't know what's happening there. Paul does these things really quickly and I'm struggling. I need more practice. It's not doing it for me. What's wrong?
You're not clicking. Yeah, you're not clicking on the rectangle.
Yeah, that's right. So it goes down to right down to there, possibly even down to there. So there's quite a big. So and there are others. There are others here. I won't waste your time and draw them in, but you can draw them in yourself. And from the top of that candle, or the bottom of the wick, down to that wick there, there's another area. So the point I'm trying to make is there are several areas of imbalance which are caused by this big downturn yesterday. So we need to bear those in mind when we're looking at which way price is going to go. If you put a gun to my head and say which way is price going to go, Richard, I would think it's probably going to go back up and take out these imbalances, get back in the field of play. But you know, that's not me making any predictions. That's just my gut feeling. There are areas of imbalance to take out. There are outstanding POCs to take out. But anything could happen. We've got news events, and I don't try and second guess the market. I try and follow the market. And one of the ways that I do, and I'll finish off with this. One of the things that I do to it's that one, isn't it? Yeah. There's a thing called a parallel channel, which I quite often use to save me sitting looking at the chart. And if I was to put a parallel channel on here, actually I need to move that to make it valid. I need to. I'll start again with that. So if you look at the second one down, Trendline Tools, parallel channel, I'll put it to the top of that there. And I'm not having much success today.
You always have problems with this, don't you, Richard?
Yeah. Right. No, I've done it again. I need another cup of coffee. Here we go. This is another example of why I only trade gold. Because if I was doing this on several different forex pairs, it would take me forever. But that's my excuse. So there's a bit of consolidation anyway. It's not strictly accurate, but this is one of the tricks that I use to avoid me having to sit at my chart. So I put the parallel channel to more or less cover the consolidation that we're in at the minute. And you know, bearing in mind, price can do one of three things. It can either move sideways and stay in consolidation, or it can move up, or it can move down. I don't know which it's going to do. I want to go make some breakfast, so I'm going to set an alert on this parallel channel. So I click the alert icon and I ask it to give me an alert when it exits that parallel channel, and I'll get once per bar, and I click on that. You'll see the icon appear here in a second. There we are, there's the alarm icon. And that means now I can leave the chart, and I'll be alerted when price moves out of this orange consolidation panel. And then I'll come back and analyze it, reanalyze it. That's how I trade. I don't sit looking at the charts all day. I set alerts to draw my attention to the fact that something has changed, and then I come back and reanalyze. Now, as I say, I've got it's a gut feeling. It's no more than a gut feeling. I think price is going to break out of that channel and make its way into the value area low. I will wait until it actually gets into the value area low, and then I will look to take a buy. Bearing in mind there's a couple of points of interest here. There's one there and there's one there, but I think it will eventually make its way up to the target. I could, if I wanted to take the safest of all trades, I could take a trade up to that point there, because there's been a lot of interest at that point. It wouldn't be a massive trade, but it would be a pretty safe trade, and it would be, well, it'd be a 10 pipper or thereabouts. If I was to go up to that one, there'd be 45 pips. So, you know, it's all about how you prefer to trade. Personally, I trade conservatively. I don't take unnecessary risks. Right. Okay. So I'm coming up to the hour. I've recorded this, and I'm going to put it in my YouTube channel. Oh, I need to. There's two things I need to mention. So if I go to my YouTube channel, can you now see?
Yes, I can, Richard.
Yeah. Okay.
Yeah.
This it's not very exciting. It's just I put my video whenever I remember to record them, I put them in the YouTube channel. The first video I ever did was my 3-line strategy for trading gold, which is my first attempt at using Zoom, and my first attempt at a live session and explaining the 3-line strategy. It's about half an hour long. I've just done it again, and it's taken me nearly an hour to explain it. So I guess this 1 hour session, once I put it in, will supersede this one. But if anybody's interested in going back to any of my previous, there's one on parallel channels, which was only 4 minutes long. There's, I'll just move you guys out the way. There's one where I explained the 4 types of volume profile, and then I went on to the normal session. So that was an 11-12 minute explanation of volume profile, if anyone wants to go back to. And then most of these others are just my live sessions. But you know, if anybody wants to go back, this was an interesting one. The Nash lot size calculator, which I'll go back to now. I'm going to explain this for any newcomer. You can Google this. It's Nash markets. You can Google it, and you can just get it up, or you can download the app onto your phone. They've got it in an app version, and I'm just going to go through this very briefly. See if I can move you guys out the way again. This is you won't be able to see this, but on when you're running a Zoom meeting, you've got everybody's image, and it keeps getting in the way of what you're trying to do. It looks like I can't move it. No, okay, I'll work around it. So very quickly, very briefly, Nash Markets, I believe it's called Nash Markets Position Size Calculator. There's a little hamburger at the top where you can change the settings. So if you click on that and go down to settings, it allows you to choose your currency or the currency that your broker account is in. So if you wanted, for instance, to change it to British pounds, you would click on that and it would take you, you would set it there and it would show you all the information in British pounds. So I'm going to try and set up I'm going to try and find out what my lot size should be on this next trade that I'm going to do. So put my account balance in and I'm going to make some figures up. I'm going to put £20,000 in. The account leverage, I know that my leverage is 100 to 1. I want to risk 1%. Now it works out automatically that I'm risking £200 on this trade. If I go to asset class and I choose metals, because I'm trading gold, I then select which metal and it goes in there. You can refresh the entry price, but that's giving me the current price from the data feed. If I'm going for a buy, I click on long, and I can either put my stop loss price or I can put my stop loss in pips. So if I'm going for 10 pips stop loss, and let's say I'm going for 20 pips take profit, this is where I'm going to struggle because this image is in the way and I need to move it. I've got you all out of the way, right? So all you need to do is put in your stop loss. I use the pip value. You can use it a percentage change, or you can put it in as a stop loss price. But whichever one you put in, it calculates the other two for you. So it's calculating that on the current price of 1815.76, my stop loss will be 1814.76. and my take profit will be 1817.76. I then go to calculate the position and it's going to work out my lot size. So on that information that I've inputted, it's telling that my lot size should be 2.48. It's telling me that my stop loss will be £200 and my take profit, if it achieves it, will be £400. So I don't have to work out my lot size every time. Well, I always work it out, but I use this to work it out. It's way easier than using the My FX book. If you go to FX calculators, they've got position size calculator there, but that only works for Forex pairs. It can be used to work for gold, but you've got to make some adjustment to it. And I actually use this every time. I use the Nash. Where are we?
So Richard, you haven't got to do that change to the 0.01 on the. No,
you haven't. It's not in this.
On the calculator, yeah. That's
right. It does it automatically. I'll show you. You can use this for cryptos. You can use it for energies. So that's things like US oil, natural gas, UK oil. You can use it for shares, you can use it for Forex, you can use it for indices. Select the class, so I can use it for all of these. These are the ones that Jeff uses on his trading. And you can use it for metals. So this is why I find it useful. I use it for gold. You could use it for silver, copper, and I'm not sure what that one is.
Platinum.
Platinum, yes, that's right.
Yeah.
So I use it. I use it for gold. I find it really useful. I find it helps me get an accurate lot size every time. And I can just put in the percentage I'm prepared to risk. It converts it to a cash amount. And it also gives me, if I put in 10 pip stop loss, it actually works out. It's saying the entry price is 18.15, my stop loss price is 18.40. Obviously, this might change by the time we get back to the chart, so it's just a guide. But that's the important thing. You put your stop loss in and you calculate the position, and it tells you 2.48 is your lot size. And I find that really useful. Right, okay, so let me get back to where I was. So are there any final questions before I call it a day? Because I'm just over an hour and I want to keep the video to that sort of length.
No, you've been very helpful, Richard.
Okay,
usual.
okay.
As always.
Thanks, Richard.
Thanks a lot. I'm going to put this in YouTube now. What I wanted to say is, if any of you have got anybody that is not in the Ninja group and therefore not able to see this in Discord or in the Facebook group, just refer them to my YouTube channel. They can have a look at it and see what they think.
Yeah, we'll do, Richard. That's much appreciated.
Thanks, Richard.
Thanks.
Yeah,
very much.
thank you.
Thanks. Have a good day, everybody.
Speak to you later. Bye all.
Bye now.